Hello guys, welcome to a Trading Parrot. People are trading the expectation of a cut from the Federal Reserve coming in September and shifting their attention out from the geopolitical tensions thanks to the discussions on ceasefire and things going a little bit more quiet in the past hours. Thanks to that, the Nasdaq is putting in a new all-time high as we speak, and the S&P is in progress towards the target as well. Lots of things are shifting in the order book that I really want to discuss with you guys. The order book is getting really busy, and I'm also going to cover a little bit of the hash rate, what's going on in here, because we're getting a signal in here pretty much precisely today. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. Can we get 1,000 likes today? That will be phenomenal, not just for the channel, but it's gonna give me a lot of energy to put out more videos like the ones I've been putting out in the past 10 days, covering dedicated altcoin videos with in-depth analysis. If you want to trade Bitcoin or altcoins, there are links in the description for Bybit, $500 position airdrop, and the Well Campaign 2.0, where you can win 10% cashback and 3,000 future bonuses on bluffing. We got coming in today in just a few hours the Federal Chair Powell testimony. Let's get started with the CME that we put out last night. That precise level is at 106,445. That is around this area in here and is priced in CME premium. If we find the equivalent on Binance, that is roughly around 106. There's a bunch of elements on the daily and the weekly that are keeping me still in the neutral. If we close the week like this, I'm gonna flip it back into the green, and if we put a new high on the green on the daily, I'm also gonna flip it into the green. Let's start with the 4-hour time frame. On Monday, we managed to break out the yellow line and retest it, and we say that if we manage to do that and defend that position, we have a chance to go into 75 at that time, but now it's 74.46, and that is a moving target that is very quickly today slightly below 109, and it might meet with the price somewhere here in the middle in the range of this order block that we can see on the left hand side. Notice that we have done some pretty good progress so far, particularly overcoming the top anchor VWAP, which is located at 106. Notice that we have done that 1, 2, 3 times so far since the range highs, specifically this one. We managed to stay there for longer. If we were to go into 109 or slightly lower where we meet with that line, that is still not a higher high. I've been begging for a higher high that goes beyond 110 to start breaking the bearish structure. We are taking some highs in the vicinity in here, but those, in my opinion, are not necessarily the ones that matter. If we were to meet with this line in here, that doesn't necessarily mean that that is the peak of the price. That could be the peak of the momentum on the 4-hour time frame. Price can still go beyond that. Let's remember that not many people understand how RSI works. On the daily time frame, potentially we could be seeing a breakout on this area in here. Notice that we are doing this right after we pinch this level and reclaim. I have to move the line respecting the fake out, which is now the support, and thanks to that I have adjusted the new support at 38.95 and the breakout area, which is a 52, and I kept the 85 somewhere in here. So let's go into the price and let's see where is the current support that we are breaking. We are potentially turning it into new support that is more or less at 106k. That is exactly where we meet with the anchor VWAP from the all-time high, and is the range high on the volume profile. So really between 106 and 107 it is the breakout area, but we need to be very careful because all this area in here has been so far a full disaster. We broke out 1 time, 2 times in here, 3 times, 4 times, 4 times that we managed to hit that level and be above it and then go back below it. Interestingly, after all those failures, we didn't really manage to pinch the point of control, which is what volume profile model tells us that is what is supposed to happen every time we lose the breakout. And instead of that, we are persisting in this area trying to break out. This is one of the main reasons I remain very vigilant on whether we see another failure. If we see a failure, we should be expecting to take the recent lows. It all depends how ugly is the rejection. If it's just a pullback, we should be hoping to hold 103k. On the weekly, we are getting getting pretty much what the bulls always wanted, which is after losing the range of 104.4 to put a green engulfing candle that reclaims the level and promises to go way beyond all-time highs. We are just on Wednesday, so now what we need to do is cross our fingers that we close on Sunday something like this. I forgot to mention it, but on the daily time frame, we could be about to see a bull cross around the zero line. I do not consider a high quality signal a bullish cross around the zero line. I prefer when we are way below it, but I just want you to be aware of that as well. On the monthly time frame, things are looking pretty good. As you can see, we are holding the highest close from January and February. In the 4-hour time frame, we are seeing an accumulation of leverage squeeze signals in this area in here. That means that there is a ton of longs betting on this area, but that is not a high quality signal for a short. I just want to make sure that you understand that we are getting them. It's a leverage squeeze signal 1, and I kind of prefer to wait for a signal 2 to take any action, but let's see what other data points we find today. So far, there is some profit taken on Bitcoin and Ethereum relative to what we saw in the previous days. Of course, we are in an area where we should be expecting people to be in profit, but nothing that substantial that can necessarily immediately break the uptrend. We recently have a hash ribbons buy signal, and the signal triggered pretty much at the top and is currently in a drawdown. And since the hash ribbon hasn't been performing that well, in the last year I introduced an alternative that also monitors the hash rate. In this case, I'm using the PNR filter and I'm getting these signals plotted right in the chart. They trigger every time that the hash rate goes very low. So it's kind of a counter signal. The hash rate tends to trigger once there is already a recovery, but at that point the price has already rallied a little bit. My signal triggers precisely during the collapse of the hash rate when it goes way too low, and the main reason is because these extreme lows of the hash rate are really great entries. It's something that I just observed and I say, why not trading that instead of the actual buy signal? And let's see what's the performance on the daily time frame in the history of Bitcoin. We got this recent signal today. The previous one triggered at the highs of 94 and it had upside. I guess all hash ribbon buy signals have upside because Bitcoin has been always in a long-term uptrend, and particularly because we are in the middle of a bull market. But let's see if this one nails better the timing. For example, this buy signal starts from 68, but my buy signal starts from 57 and from 58. There are some buy signals in here that I don't have. For example, this buy signal starts from 22, but my buy signal starts from 16. And in here, the buy signal triggers at 21, whereas my buy signal triggers at 18. So there is a little bit of better timing, we could say. And thanks to the hash ribbon waiting for the recovery, this one triggers once we are already in 45, but it doesn't trigger from the top. Mine triggers in this depression that has an upside of 17%, and then it triggers all this range in here where the hash rate was really declining. We can go back in time and see some other signals that are pretty good, even this one in the bottom of the bear market in 2018. Anyways, I just wanted to show you that signal. I can share this chart inside my community in my Patreon. Just give me a shout if you want it. Yesterday I was talking about the retail orders that we were seeing, so let's have a very quick look at what's going on at the moment. You can see that from the beginning of the rally, around 98k, we have seen an increase in orders coming from $100 to 1k. That is the orange line that you see in there, and now it's starting to decline. Interestingly, as they decline, the purple wells are starting to slightly move to the upside. Nothing that significant considering all the decline in their long trading that we can see from the 16th of June. So I will say that primarily the orders that must be open at the moment in the exchange, they should belong a lot to retail. And if we want a second confirmation, CryptoQuant is also highlighting that we are in an area of a lot of retail orders. You can see in this cycle where retail is primarily responsible for trading, and we are precisely in that area. That doesn't necessarily mean that they always get wrecked. For example, in this area, they are buying a breakout and they got it definitely wrong, because then we saw a drawdown from 71 back into 49. Definitely they got burned there, but in this area they started re-entering again. They were longing and longing and longing all the way down in this area in here, and now they are trading this area as well. With the shift that we are seeing, if there was a confirmation that there is an incoming rate cut, I will expect that they're gonna get away at least with another leg up. That doesn't discard that we should be seeing some volatility as well, particularly if the ceasefire kind of blows in their faces. I'm not being literal, I'm just saying if they don't really respect it, then we should see some volatility on the way. But with rate cuts as a promise and this breakout in here, we have that target of 85 daily RSI that is currently sitting at 142,000. The flag, if it was to play out as a technical target on the weekly, if it gave the same performance as before, just a one-to-one extension, that is 148k. So as long as nothing moves and we are all happy with rate cuts incoming, that is the technical target, if you were to ask. Long-term holders are starting to slow down their accumulation. As you can see from the lows of 74, they've been aggressively accumulating, but as we approach this area in here, they're starting to roll over. That is the typical behavior that they show right before a breakout, where they just hold what they accumulated and they expect the breakout, and then they start the distribution into the breakout. So one way of interpreting what could come next is if we get the breakout and they start suddenly distributing, that is the typical scenario of a confirmed breakout, because that confirms that that is what they were accumulating for. We've seen yesterday for a second day a pretty impressive inflow on the ETFs, this time 588, and we are back in the grid at 66. Let's look at the liquidation levels and the order book, where I have most of the information that I wanted to share with you today. We can see how we are approaching the liquidity in here. This is not the biggest liquidity. Remember that the largest pools that we've been tracking in the past few days are 109 and 111. So I wonder if they're gonna get away manipulating and pushing the price, babysitting it all the way into 109. That is pretty much what I've seen in the 15-minute chart, where every time that there is a swing low, they come in with their big pockets and they defend the price to continue rallying. I call this babysitting because they put orders. They literally draw with a pen how they want the price to move. As you can see, this is not just a single coincidental trader that happens to be with another one doing the same thing. This is definitely large pockets that are coordinating the move like this. That's just my humble opinion. Let me know in the comments if you agree, or if you think that I'm turning into a paranoid parrot. So far, the thesis of the liquidity hand is playing out perfectly well. You can see we reclaimed the neckline, and it's been 3 days in a row that we follow the line into the top liquidity. Let's see what we are leaving behind as well. In the past 30 days, we are incrementing the liquidity at 103.3. That is the largest pool. On the upside, 109 and 111 remain the big bosses, despite the fact that the price has moved slowly and steadily to the upside, taking 105, 106 and 107. I'm still not seeing large liquidations. And that is just the consequence that we are only targeting so far this blue area. As we get into 109 and 111, if we get there, we're gonna see large liquidations and a flip into the season of shorts being mostly liquidated. We are no longer in an area where it's predominantly negative funding rates. You can see that now most of the exchanges are flipping into the positive. That means that there is a dominant long position sizing at the moment. In terms of the orders in the exchange, right here at 107, we have around 41 million resistance, and then followed by another 40 million at 110. We managed to overcome the point of control, which was at around 105, and we are starting to trade against the top of the range, where we can see how people are positioned at the moment. 109 and 110 is where there is the most liquidity. We now have have the CBD pointing up, so that means that some aggressive buyers are stepping in. All right, let's talk about what really matters. This is the forensic analysis I wanted to do in this video, starting with this peak that we have in here that shows 0.16 of ask liquidity that enter in this area. Right after that, we started shooting back up. Historically, that has been an area of resistance, but this time is not necessarily playing out so far. Longs have stepped back into 37, and I have a threshold in here wherever there are so little longs that we tend to put local tops. For example, all this block in here where we are at around 33, at the lowest, that is a local top. In here we reach 37, it was a local top. In here we reach 36, 37 is a local top. In here we got even into 30. So within that 40 and 30, statistically speaking, we get a local top most of the time, not all the time. So this is another data point that you need to contrast with other checkboxes in your own list to make decisions, but it's definitely not something supporting the move up. Funding rates out of the negative, making a complete flip into the top of the range of the funding rate, as you can see. That is again an overcrowded environment of longs, supporting what leverage squeeze was saying earlier in the video. Now, if we look at the bid-ask ratios that we have in here, 10, 5, 2, and 1, and we focus on this end, let's look at how much support do we have below the price. 10% away from the price, we are only at the 25 percentile. That means very little support, 10% below the price. 5% away the price, we are at 26, very little. At 2% away from the price, up and down, of course, both, we need to do a ratio, we are at 48. So we are very mild. Nothing is really dramatically short or dramatically long. We are right there in the middle. And the same at 1%. And that's what I call this manipulation, because what they're doing is they're constantly putting equivalent amount of liquidity above and below, very close to the price, with very low volume in the whole range, and they place it strategically just so it remains doing this, which is nonsense price action. I mean, we don't see this very frequently. It is a pattern that is bullish, but in my opinion is being drawn with a pen that instead of ink uses a big large pocket. Anyways, the question is not really whether there is manipulation or not. It's more like what's coming next, or what do they want us to believe if there was manipulation, which we really cannot confirm there is. The obvious one is they want to trap more retail into the idea that we're going to get somewhere. My two bets are that we're going to get into 109 or 111. And the second thesis is they want to go into 111, liquidate all those people, and then make a big move to the downside. That is my second thesis. And all of that is assuming that we don't get the rate cuts, because if they are fully 100% confirmed by official sources, then definitely someone knows something and we are going to go into 115 and into price discovery, which is my third hypothesis. Let's look at the fair value gaps just in case in the 4-hour time frame we were to see a rejection from this level and we came back below 106.4. Let's say we go to that CME gap that I mentioned earlier in the video just to fill it. That will make all this line like a rejection because 106 is below the yellow line. And by doing that, we can go into these brown blocks in here, which represent fair value gaps of 4-hour overlapping with daily fair value gaps. Above the price, there are no fair value gaps, so we cannot say anything, but below there is some motivation to go there. Just watch out with this move in here, study it properly, because all the way up in here, it was a ladder that there was no clearing of imbalances. No CME gaps were clear in this area, no fair value gaps were cleared, and indeed we still have all the way down full of fair value gaps. It is a very slippery area. If we were to enter at some point there, things can happen really quickly thanks to all the attractive liquidity that is in each of these levels that has never been cleared out. Why am I saying this? Because I don't discard that we carry on with this behavior and we end up going into all-time highs, again following the steps of this sideways, we not zigzag, sideways and pump, and pump, and pump. So if you are too short, be prepared for some sort of wave like this, and you have to tolerate the risk of that, okay? Very important in terms of margin or in terms of stop losses or whatever you're gonna use. The risk of shorting in here is that Nasdaq has an ugly rally that continues for a few weeks, and then you're completely trapped underwater with a short. Better to be wrong very quick and close it and not get into a huge negative drawdown. Still, I am looking for shorts in this range. As we move into that liquidity, I am with my fingers ready to action. If you want to get informed on any of my steps and be the first one to know, then join me on my Patreon. It's just $10 a month. I don't trade very often. I'm very picky, so be well aware of that. Do not expect that every day I'm gonna be sending you 10 deals. It's gonna be more like once a week, if so. But you can also get informed by joining my Telegram channel, Twitter, or Instagram. But my patrons get spoiled first, of course. So let's do a quick wrap up. I think at the moment the move is very sketchy and I feel like I don't trust it. There are a bunch of conflicting signals that are telling me that here we should be getting a pullback. But I already learned the lesson in all this range in here where everything looked burnt from the very beginning, but it still managed to get into 112. Therefore, my strategy in here is still to look for those sources of things that are looking wrong, planning to trade them. But if we enter in an area like this, as soon as I'm wrong, have prior to that a plan in case that happens. This to me is not an area to long, it is a breakout, and you know my rules, I don't trade breakouts. I look into the data before the breakout happens, find the chances that that's gonna play out. That's how we enter into this low risk, high reward rally from 98 into 105. From here and on, in my community, people decide between taking profits with me or leaving there a stop loss in profit and start moving it up as high as they can get. That's also fine. I'll try to put out some more videos in the afternoon covering some altcoins. I'll have a look, but leave me a comment down below if you have any requests. Thanks so much for watching. I'll see you on the next one. Bye bye.